Hello everyone, hi, welcome to the channel of Wall Street Mojo.
Watch the video till the end, and also if you are new to this channel, then you can subscribe us by clicking the bell icon.
Friends, today we're going to learn a concept which is known as the credit note. Now, as you can see, there's a dialog box over here which states something that, when the purchaser sends the debit note, the seller approves it and then sends back a credit note stating that in the books of the seller, the purchaser will be credited. I hope you must not have got a clear idea what exactly is going on, but we'll try and understand. Now, first, let's understand what exactly is the credit note. Now, when the purchaser, when he sends the debit note, what does he sends? The debit note. The seller basically approves it and then sends it back a credit note stating in the books of the seller the purchaser was credited. Now, even if it is issued just to respond to the purchaser's debit note, it isn't actually a good thing to happen to a seller because a credit note is basically an indication that the amount of the sales will be reduced, right? But why the seller issues my question is why the seller issues this even if he knows that it will reduce the amount of sales? Okay, let's have a look at that. Why is credit note issued? Why is credit note issued? See, basically, a business cannot exist or exist in a vacuum. So, a business needs to thrive, and without the reputation and the goodwill, it will not be able to perpetuate for a very long time. So, issuing a note is basically, you can say, a gesture of goodwill, which is shown by the seller to the purchaser, right? Seller to the purchaser. I'm just indicating in letters, and offering a credit memo stating that the amount of the goods are defective or erroneous and will be taken back, and for the returned amount the purchaser can avail something from the seller. So the gesture makes the relationship between the buyer, that is the purchaser, and the seller rock solid, and as a result both of this company will thrive. Let's do some accounting portion of this so that you may have a really good idea about this. Accounting of the credit note. Let's try and understand this. Let's say there's a company called MNC. MNC company has bought a goods, let's say worth of 40,000, right? From, let's say, SNS traders. An MNC company over here finds out that 2% of the stock is defective, right, of the total goods. So the defective in terms of amount is going to be 800, right? Now MNC company basically would issue a debit note stating the same. Now what would be the journal entry in the SNS traders books of account? See, to SNS traders, 40,000 worth of goods was sold. Now it was reversed. So the journal entry should be something like this: sales account debit, that will be closely to 800, 800 over here, to reversing MNC company account, that will be credited, right, to the extent of 800. Now again, one can argue that the sales wouldn't be debited, but to create the effect in the ledger will debit the sales account. See, here's the full version that I'll show you of the journal entry before and after the issuance of the note. It will go something like this: MNC company account debit to the extent of 40,000 to the sales account, that will be 40,000, right? And the next entry is going to be the reversal part: the sales account debit to the extent of 800 to MNC company account, right? The extent of 800. And there will be one more entry that will be for the sales return account debit sales return account debit, that will be closely to 800 again to the sales account. This is very necessary to make your ledger appear proper. Now, after understanding the example, let's get into the traits or the characteristics of the credit note. See, there are a few important features we need to know, and here are some ones like, the credit note is issued by the seller. See, when the buyer issues the debit note, the seller responds by issuing this note, which states that the seller would credit the buyer's account, right? The buyer's account, so that the buyer needs to pay less or can avail other goods for the same amount paid. Second, the credit note, it isn't a good sign for the seller. It isn't a good sign for the seller. Isn't a good sign for the seller because by issuing credit note, the seller basically has to reduce the amount of the sales, right? They have charged from the buyer, right? Third, the red ink is used. Now, since the amount is reduced from the sales, it is perceived as a negative amount, right? And that's why the red ink is used. Fourth, the credit note is or the credit note can be issued by the buyer as well. Now, in one condition, the buyer issues the credit note for the seller, right? When the seller undercharges the buyer issues a credit note for the seller. Fifth, the sales return book is changed. Now, as it is issued in certain cases, the sales return book is changed if the amount of the sales is reduced because of some of the defective goods, right? I hope you have got a clear idea. We just understood what is exactly the credit note, why the credit note is issued, a gesture of goodwill. Then we understood within the help of an example of MNC and SNS traders, where we had the details of sales to MNC in the by reversing the data. This is 800. We reversed the entry. This is how actually the whole transaction took place. MNC to sales, that was the initial case. Then sales to MNC will be reduced to the extent of 800, and to give a proper ledger effect, we did sales return to sales. Sales return account is debited and sales has been credited to that extent. And finally, we understood the 5 traits, and which were more than enough to cover up the whole credit note concept.
So that's it for this particular topic. If you have learned and enjoyed watching this video, please like and comment on this video and subscribe to our channel for the latest updates. Thank you, everyone. Cheers.